Association, where we pride ourselves on our goal in disseminating educational related information to our membership. This is another milestone in such an event. So as you're aware, we have planned a long weekend ahead, especially in this regard, where the FX Global Code is being discussed in detail. And as a prelude to all of that, today's evening is scheduled. So I wish to acknowledge the presence of bank CEOs who are present this evening, some of them at least, and also the Director, Chair, Board of Education of ACI FMA, Mr. Rui Correia, who is amongst us and who will be, I think, stealing the show from this evening onwards until all throughout the weekend. And also the President of ACI Asia, Mr. Shanka Pereira from Ceylon Bank, who is the DGM Treasury there as well. And also the President of the Sri Lanka Forex Association, Mr. Tivanka Damanupala, who heads the Treasury, or the AGM Treasury at Commercial Bank. So without further ado, and to get the ball rolling, I wish to call on the President of the Sri Lanka Forex Association, Mr. Tivanka Damanupala, to get things underway. Thank you.
Thanks, Brian. Good evening, ladies and gentlemen. A warm welcome to this evening's presentation on the FX Global Code. First and foremost, I would like to welcome the CEOs of banks who are present here, the heads of treasuries, the compliance officers of all banks, fellow invitees and members of the Sri Lanka Forex Association. Just a brief outlook on what ACI is. ACI FMA, ACI Financial Markets Association, was founded in 1955. It's a leading global association representing the interest of wholesale financial markets community with over 6,000 members from representing 60 national associations. The main role of ACI is focusing on enhancing best market practices and supporting market participants to adhere to principles of ethical conduct. A note on what SLFA is. Sri Lanka Forex Association is the premier association in Sri Lanka in developing, promoting, and stimulating innovation in the financial markets of Sri Lanka. The membership comprises of staff of global markets and treasury staff of licensed commercial banks, and also members of the foreign exchange and money brokers community. The Sri Lanka Forex Association is affiliated to the ACI Financial Markets Association. Like Brian said, we have this evening Mr. Rui Correia, who is the Executive Director and Chair of Board of Education, ACI FMA. He will be taking on the session this evening and also the workshops that we have planned tomorrow and day after. We have also in our midst Shanaka, our own Shanaka Pereira from Ceylon Bank, who is the President of ACI Asia. The FX Global Code has been successfully implemented by several market participants in various jurisdictions over the past years. And it has certainly assisted the strengthening and enhanced the transparency of the largest financial market in the world. We in Sri Lanka, as you all know, are planning to adopt the FX Global Code as per the initiatives of Central Bank by 31st of July this year. SLFA, which has taken a leadership role in this, has already provided training for over 100 participants over the last couple of years. We hope that this seminar will be of immense benefit to our marketplace, and we should thank the management board of the ACI for agreeing to conduct this seminar and the workshop in Sri Lanka. And also, this program is being broadcast live to the other nations in Asia who are affiliated to the ACI. So we hope we will have a fruitful evening by listening to this session, and invite you all to enjoy this session. Now I would like to invite Shanaka to speak a few words on behalf of ACI. Thank you.
Chief Executive Officers and Compliance Officers of banks, Mr. Rui Correia, Executive Director and Chair of ACI FMA Board of Education, ACI FMA members from Asia who are actually joining us through the ACI FMA YouTube channel, and my dear members of SLFA. First and foremost, let me thank the Chairman and the President of ACI FMA for their unstinted support in helping Sri Lanka implement the BIS FX Global Code, and Mr. Rui Correia for readily agreeing to conduct the workshops. This is the second of which we are having in the next 2 days. Following up on President Ivanka's speech, I too echo the importance of the timely implementation of the BIS FX Global Code in Sri Lanka's financial market, and also congratulate the Sri Lanka Forex Association Executive Committee for giving leadership to such an enormous project. As you are well aware, the BIS FX Global Code serves as a crucial framework for promoting integrity, transparency, and efficiency in foreign exchange markets. By adhering to this code, financial institutions can build trust and credibility both domestically and internationally. It also fosters a level playing field, ensures fair competition, and ultimately enhances market stability. Moreover, embracing the 55 principles of the BIS FX Global Code demonstrates our commitment to upholding the highest standards of conduct in the financial sector. It also sends a powerful message to investors, regulators, and all stakeholders alike that Sri Lanka is a responsible and a reputable participant in the global financial markets. Therefore, it is of paramount importance that all stakeholders work together with the Sri Lanka Forex Association towards a swift and comprehensive implementation of the BIS FX Global Code in Sri Lanka. Let us seize this opportunity to strengthen our financial markets and pave the way for sustainable growth and prosperity. Thank you. And let me now invite Rui to carry out the rest of the session. Thank you.
Good evening, everyone. First of all, thank you all for saving a bit of your Friday evening pre-weekend to hear me and to talk about the FX Global Code. Thank you, Brian. Thank you, Tivanka. Thank you, Shanaka. Thank you all for coming, and also thank you for the ones that are on live streaming and the rest of ACI national associations in Asia. I think you've heard it all that Brian, Tivanka, and Shanaka mentioned, and I think what I'm doing here today is actually spread out by what you see on the screen. It's very, very good, and it's nice to come back to Colombo and promote the three core values that we have. We are here represented by the membership through your membership in our affiliated SLFA, and we are here to promote ethical conduct via education. As Brian, Tivanka, and Shanaka said, I'm the head of education for ACI, and we do develop quite a lot of these activities to promote adherence and implementation of the code on an ongoing basis since the code was launched in May 2017. So the purpose of today's summary presentation is just to give you a little bit of an outline of the code, the purpose, the current status of the code, and of course, and also mention to you why this kind of initiatives towards education is very, very important for that ongoing adherence to good market practices. It needs to be said that we're not here to teach how you should behave in the market. And this is not for the individual person. This is an effort by the global industry of the largest financial market in the world by volume, which is the foreign exchange. But it is so important, not just for foreign exchange, that there are other codes which actually have a global nature, which follow the example of the FX global code. So, but again, the purpose is not to tell you that you did wrong or you could do better. No, the purpose is that for all of us to enhance what we already assume there are good market practices, because we need to fight a little bit of the complacency that occurred over the last few years and led to some of the events that we all heard about, and some of them we might even know in more detail through the news channels. The whole idea is that what we used to do in the past towards the promotion of the market, some of those things are not valid anymore, because the world has changed, financial markets are changing on a constant basis, and we need really to challenge our knowledge and our practical. And everyone needs to do that all over the world in order to improve the FX market, and as Shanaka mentioned, the integrity, the transparency, so that it can be a market that we can all transact in a competitive manner and with full trust that the market functions. So that's the whole idea. That's the whole idea that we're going to just to briefly talk today, and also over the workshop in more detail, of course, during the weekend. And we'll have on the workshops on the weekend, we'll have quite a lot of exercises to go through some of those cases. But picking up on some examples, let's go and get some examples of what happened and what shouldn't have happened if the FX code was implemented in theory. So I'm sure we all heard about this kind of events. I mean, it's just a selection of some of the news headlines that was spread around the world over the last 10, 12 years. The FX code work started in 2015. It was launched in 2017, but the need for a global code was actually identified a few years later. So we can say that 10, 12 years we already identified that we needed when the first scandals started to come out. Not only for FX, but we're talking about FX here. So these are just some of the examples impacting the FX market. But see, these are some headlines. I want to mention to you some particular examples. This is the first one. Just around last year, some of the US banks were fined for improper usage of WhatsApp. What's the problem with WhatsApp? It's an open channel, it's not encrypted, and some of those persons within the banks were sharing sensitive information either with clients or either internally. So some of those banks were actually fined, and the persons were dismissed because they were inappropriately using confidential information through an open channel. That is something that is well covered in the FX code. You should not, only if you have specific approval from compliance on exceptional circumstances, you should not use an open public channel to share sensitive information about a client. This is something that is well there, but we've seen that even last year, even if the code has 7 years old now, still last year we saw that in the United States, that year and the years before. This is just one example. Another example, this happened very close to here in Thailand. 20 investors filed complaints against a fraudster involved in FX. That fraudster ran and supposedly was an experienced broker, read an FX scheme, and was actually promising quite a lot of returns, nice returns to clients. The problem is that there was no identity. When we're talking about KYC, know your client or know your customer, that's sometimes different terminologies, but KYC, I think we all know what that is. It's important that we do the KYC vice versa. It's important that in order to start a trading relationship in financial markets or in the FX market, you need to do your KYC checks, and those KYC checks are very needed. But it's not just doing that KYC check at once. The FX Global Code recommends that you should do that KYC checks on a regular basis, particularly if you understand that the situation from the client may have changed, or the situation of the sector of the client. So it is something very, very important that we should do vice versa. Another example, here also very close in Singapore, the MAS has penalized 3 banks and an insurer for breaches of anti-money laundering requirements, not only anti-money laundering, but also the counter-financing of terrorism. This is something that is well covered in the FX Global Code, not just the need to identify, for instance, that you need to have an extra care if you do third-party payments, because third-party payments might be leading to a money laundering situation, but you should also take care as well of the regular training that needs to be done every year, or in some jurisdictions even more frequently than just every year, on applying all the necessary tools to avoid money laundering and counter-terrorist financing. Again, I'm not saying that the FX Global Code will solve these issues. The FX Global Code helps to solve those issues, but then the responsibility of complying with the code and being a voluntary code, it's not a regulation at a global spectrum, but it helps every market participant. And when we talk about market participants, it's not just the entities, not just the banks or the corporates, it's each and every one of us involved in the FX market. So the FX Global Code offers guidance for all of us to apply on a particular action that we have in one day, or setting up processes and procedures to avoid these situations happening. This is what the FX Global Code helps to provide for the guidance. You might have that guidance in the applicable law of your jurisdiction, of your country, of your market, yes. But if you don't have that applicable law, that's where the FX Global Code helps, because it helps to offer guidelines where they don't exist. Another example, there's some companies there, supposedly reputable brokerage firms, offering to trade Forex anonymously without KYC. How do they do it? KYC, as we just mentioned, is very important for if you want to do a trading relationship. How can you do it? You have to open an account in or you have to buy a cryptocurrency, and you have to risk. Then you have the cryptocurrency risk, price of Bitcoin, but you also have the price of the dollar, because most of the cryptocurrencies are traded in dollars. But because you have to go into a cryptocurrency, you do not need to do the KYC. Then they will do the FX for you. But you're creating 2 risks here. But there are companies offering this, even in developed markets. And the last example I wanted to give to you is in the UK, a money brokerage service was fined because they didn't comply with some important tools, and they are all covered by the FX Global Code, as you can see here on the bottom. If they could comply, if they could apply the FX Global Code and monitor its compliance, they would have avoided losing the license from the FCA that they had at that time, and also have avoided that fine. So again, the FX Global Code helps all market participants, entities, and the personnel, the staff of those entities, to go and apply the guidelines to avoid these things from happening. These are just some of the examples. Okay, now, we're talking about the FX market. Everyone knows, largest market in the world, according to the latest statistics of the BIS, $7.5 trillion. Most of it is actually done on very, very simple products. And as we mentioned, this came from the need that was identified about 10, 12 years ago, that there were some breaches, some manipulations, some fraud, some of the unfortunate events that could have shown there on the screen. We did a few others. The whole idea there is that we needed really something to remediate this market. And particularly when we're talking about remediation of this market, we're talking, for instance, something which is very, very important, the fixing of that market. There has been some manipulation of the fixing, the same as it happened in the LIBOR for the money markets. So it is, as you know, a very important price, a reference price of the day. And the manipulation had happened in indicative fixings, but also happened in live trading fixings, where transactions were happening in the fixing just to mark that price, but then, and the price was different from what was happening in the real market, and then outside the fixing, the counterparties were actually doing the vice versa. They just wanted to mark the fixing. So all the situations were identified, and then not only with this, but these are some of the situations that were identified in the fixing that led to all this project. So at that time, of course, there was some codes, internal codes. Some jurisdictions had codes as well. We actually had, and this is why ACI has been promoting ethical conduct, because we had, probably all of you know, we had the oldest code of conduct for financial markets, the ACI Model Code. It was launched in 1975, initially for the foreign exchange market, and then it evolved to other asset classes. But because we started to support the development of the FX Super Code and of the others, Global Precious Metals Code and UK Money Markets Code, and this is one reason why we were involved from the beginning of the work that the BIS led in 2015, that led to the launch of the code 2 years later, because we had a very big experience in managing and creating and updating codes of conduct. The model code was the first code of conduct really for financial markets. But because, as I was saying, because we decided to promote the global adherence to the FX Super Code, we stopped updating the ACI model code. I'll come back to you a little bit later, talk about what we have done in the past, because the ACI code is very detailed, and some jurisdictions, they still follow the ACI model code because it has more detail. The whole idea of the FX Super Code is that it's very, very general, so that it can be applied in every jurisdiction of the world. And it has really a general nature, whilst the ACI model code goes very, very deeply in some of the details. But I'll come back to you on that. But we were involved, as I mentioned, we were involved in the work, particularly because of the work of the ACI model code. So we were, our ACI model code was routinely sourced as a guide for that initiative of the FX Super Code. They had about 80 institutions, of course, central banks, sell-side institutions, buy-side institutions, infrastructure providers, of course, ACI and other trade associations all participated in that work that you see now on the version. The current version is the version that was updated in July 2021, 55 principles, 4 words, 3 annexes, and a series of reports. So the bulk of the FX Super Code is enlarging, but the monitoring needs to be done on a regular basis, because it really goes down to each of us as individuals to make sure that the guidelines that the bank has signed for need to be followed by everyone involved in the FX market. But I'll come back to that. I'll come back to that point. So I mentioned to you, of course, that this work, we keep being involved in the work and the promotion, development of the FX Super Code. We are present in working groups. Our own chairman is a member of the FX contact group of the ECB, and is then a member of the Global FX Committee. So we keep promoting and we keep working with the stakeholders, not only the members of the Global FX Committee. We're talking about 18 members, 17 full members and 3 affiliate members, so 20 members now. But we're also working with other jurisdictions, with other central banks, in order to promote the FX Super Code. So the fact that you are not there on those 20, that doesn't really matter. There's much more jurisdictions outside those 20 members of the Global FX Committee, and they are working, most of them, as we know, they are working towards implementation of the FX Global Code, and some of them even already implemented. So we are working with every jurisdiction that we know and needs our support in order to promote the implementation on an ongoing basis of the code. And this is why, as well, it's very important to us. And the Global FX Committee fully recognizes the value of ACI and of the members of ACI and the members of ACI national affiliated associations in this work that we have developed over we're going to be 70 years next year on promoting ethical conduct. So they really recognize the value that each of us provide, and our voice is really well heard and respected. Okay. So, several languages, the FX Global Code, and it's really, really, really important to mention that it is, as I mentioned to you, is about 80 institutions that develop the code. Amongst those 80 institutions, as I mentioned to you, sell-side, buy-side, infrastructure providers, brokers, central banks. But it was not something, central banks were about 16 at the beginning of the code. It's not a code, and it's, as I mentioned, it's a voluntary code, principles-based. It's not a regulation at a global spectrum, but it has been applied as a soft or hard regulation in some jurisdictions. It's really, really a guidance for best practices in the foreign exchange market. And it's a code made by the industry, and this is why you have a variety of those 80 institutions from buy-side, sell-side regulators, brokers, infrastructure providers, associations, and it is really a code for the industry. With a very, very big exception. Retail market participants are not included. They are not the subject of the FX Global Code. The FX Global Code takes care of the bulk of the whole wholesale OTC market, which is the financial institutions, the corporates, the funds, the brokers, not so much the retail individual, retail investor. Updated version later this year. That's the estimate from the Global FX Committee. When the code was launched in May 17, there was a purpose to update it every 3 years. We all know what happened to the world in the beginning of 2020. So because of the pandemic, the code was updated only in 2021, in July. Now we are coming back to a 3-year review, and it should be updated in the end of this year. The Global FX Committee is having their next meeting on the 1st and 2nd of July at the headquarters of the European Central Bank in Frankfurt, and they should be deciding exactly what are some topics that are being discussed on whether to review the code and make an updated version, and all of that should be known by the market by the end of this year when they have the meeting in early December. So what we're doing here, as I mentioned, remediation, really, we're helping to restore the trust of the FX market. We need to promote an appropriate and transparent market, and the whole idea here is that replace all other codes by a global code that can be applied in every jurisdiction, with a very, very important factor here that we'll talk a little bit later, which is proportionality. The code has 55 principles, but not every principle must apply or should apply to every market participant. You can apply the FX Global Code, and there are some tools, and we'll see some of those tools, talk briefly about them. Over the weekend, we'll go and do some exercises on that. You can look at the 55 principles and see whether those principles apply to your business in the FX market. If they do not apply to your business in the FX market, there is no need for you to apply, even if you commit to adhere to the code. You really need, and the code takes that proportionality, that diversity in mind. It should be applied according to your engagement in the FX market, the size of your activities in the FX market. So no one is obliged to comply the 55 principles, okay? When we're talking, I'll give you one example. When we're talking about, there's some principles on execution, And the principles on execution talk about, for instance, the way that you should treat a customer order. So the way that typically a bank, a commercial bank, takes care of an order that arrives from a corporate. If that order is on the fixing, if that's a stop-loss order, or if that is a sizable amount order, this kind of principle or principles, because some principles relate to this, probably should not apply to a central bank, probably should not apply to a hedge fund, probably should not apply to a voice broker. So some of these principles do not apply to all market participants. It all needs to be done via that assessment, and this is why the Global FX Committee has developed a very, very important tool that will go more over that on the weekend, but I'll mention that to you, the proportionality tool, to ensure that every market participant at least has a first assessment of which principles should apply to them. But of course, you need to go in more detail, but at least that gives you a little bit of a briefing of what can be done and what principles should apply. Another very important message for the FX Code is that every institution has their timing to implement the code. As Shanaka mentioned, of course, here and Ivanka as well, you have a requirement to apply the code, and that's the indication from the central bank, until 31st of July. In a general way, normally, the latest survey of the Global FX Committee mentioned that institutions, in average, take about 10 months to implement the code. Some institutions have implemented in 3 months. Some of them took 2 years. So, again, it all depends, in a general manner, it all depends on the way and the size of complexity of your activities. But the important thing is that we all start. The important thing is that we all start, because that way we will improve the capacity and the transparency and integrity of the market, everything that we just said before. Of course, naturally, we fully support the code, not only since it was launched, but also the latest version, and also before it was launched, and this is why we were present on that. So basically, I know it's a bit confusing, but this is the FX Code. Very comprehensive, 70-plus pages, 6 leading principles: ethics, governance, execution, information sharing, risk management, compliance, confirmation, and settlement, to promote the effective functioning of the effective functioning of the FX market. And it's really a set of global principles of good practice. And as you can see there on the top left, the development made by the institutions that I mentioned to you about those entities. It's really, really a code, very, very robust, and it covers not only front office. It covers, of course, risk management as well, compliance, and also covers the back office. When I mentioned to you the third-party payments, of course, when we're talking about standard settlement instructions, all of those are typical back office processes. So the code, again, was developed because there was a need to remediate, and as I mentioned to you, there was quite a lot of central banks from the largest financial markets or jurisdictions that are the largest volume makers, let's say like that, in the FX market, to promote adherence to the code. So they led the way. But the Global FX Committee is very, very clear. They don't want to leave any stone unturned. Ideally, every jurisdiction, on its own timing, on its own capacity and size and development, should implement the FX code. And all the participants in those jurisdictions should follow those guidelines. And this is very important for the effective functioning of the FX market as a whole. So I mentioned to you this. I'll just scroll through this part, the 80 entities that I mentioned to you. And I'll just go to this point. So the code captures guidance where clarity is needed. I mentioned to you before, if you have applicable law that covers that guidance, there is no doubt about it. Applicable law supersedes the code. The code is voluntary, it's principle-based. Your first and second and third and whatever requirement is to comply with applicable law. If there is no guidance in the applicable law for that particular market, for that particular jurisdiction, for that particular entity, FX Global Code should offer guidance on that. And that's exactly where it offers guidance where clarity is needed. And this is one of the main proposals of the code being a voluntary code. Second part there, as we mentioned, applies to all market participants with the exception of retail. How the code gets maintained, we talk about that as well, right? Not only on a 3-year review, but also the discussions that are happening on a regular basis through the working groups that where ACI is present in some of them. And the code is implemented through a framework, but also through a public demonstration of adherence, if you want. That is not needed, but if you want, and that's really a good publicity, and we'll come back to that point, and also about initiatives such as the ones that we're doing here today about training and education. This is the way really to update update the implementation of the code on an ongoing basis. I'll just go through this part. We talked about this is adhering to the codes. I'll come back a little bit later because I have a slide just with the benefits. But this is a presentation that the Global FX Committee made by the European Central Bank, and it's really important. So, history so far: May 17, small updates, then a very big update in July 21, as I mentioned to you. Out of the 55 principles, 11 principles were updated. But also very important is that over time, there has been official reports published that go along with the code. I mentioned one to you, which is, I referred to this earlier, where when we had the pandemic, the code was not updated, but there was a very important report in the second half of 2020 about the operational risk that probably every market participant was facing when suddenly in March, April 2020, we all had to leave our trading rooms, and suddenly instead of having 20 persons in one room, you had 20 persons in different rooms with different capacity on their internet, on their terminal, on a recorded line. So there were a lot of operational risks coming out with the impacts of the pandemic. So of course the FX Global Code, the Global FX Committee offered guidance through the reports that were published. So if you go through the FX Global Code, be ready, and this is just my advice, be ready to go through the reports, because the reports really help you to verify circumstances where the more or further clarity is needed. When they updated the July 21, the code, the pre-hedging and last look, which are very common topics, they are still under discussion in some jurisdictions. They provided reports with further clarity on that. The Global FX Committee didn't make a lot of changes to the principles related to those two subjects, but they provided reports to help market participants understand a little bit more. And as I mentioned to you, we should be having a new update by the fourth quarter this year. So going into a little bit more detail, the principles in ethics. 3 principles in ethics, and they're really just 3. This is a smaller number of the 6 leading principles. This is a smaller number of principles included in one leading principle, but ethics should really go along as the supervisor of all the other 52 principles. You really need to be ready to behave with ethical and professional conduct through all your activities about the FX market. And when I say you, it's not just the institution, as I mentioned, it's you FX trader, you FX person, you FX middle office, you manager, you CFO involved in the FX activities, compliance, risk management. So everyone in every institution that trades FX, everyone involved in FX functions should cover this, should be a market participant, in this case a person, for the FX Global Code. Governance, very important as well. 4 principles on governance, talking from the frameworks that you should have for effective responsibility to senior management. The FX Global Code brings higher responsibility to senior management to overlook and to establish a culture a model that everyone should follow, but also talks about conflicts of interest, also talks about personal dealing, talks about gifts, entertainment. So it goes into a little bit more detail, and also about remuneration in how you should have the compensation for everyone, not just if you are on sales. So out of these 3 plus 4, then we go into the execution. Execution principles, 11. Sometimes when we have conversations and in sessions such as this, or in conversations with the meetings with clients, some clients say to us that, particularly if they are on the buy side, they say that, oh, actually execution is only for the sell side. That is very, very wrong. That is very, very wrong. You might say, and coming back to the example that I mentioned earlier, you might say that, okay, if I'm a client, I'm a corporate, and if I give an order to a bank to do a transaction at the fixing, it is the bank's responsibility to fulfill the guidelines of the FX code. But me, being a corporate, how would I know that the bank is fulfilling those obligations if I'm not aware of those obligations? I need to feel that the bank is respecting those obligations. The only way that I need to measure that is by knowing what are the bank's responsibilities. So buy-side institutions, but again, coming back to the impact that we mentioned before, proportionality, buy-side institutions are very, very important for the FX code, even if they want to just to make sure that the banks are being honest and transparent and showing integrity in the handling of the transactions that they are given by those corporates. How are you going to monitor if someone is doing what is right if you don't know what is right? So buy-side institutions are very much involved in here. And this is the conversation that we have with, luckily, very few over the last few years. So I think the message has been heard, not ours. The Global FX Committee has made the big efforts in promoting buy-side adherence of the FX code. And that effort is paying off, but there's still a long way to go. Particularly when we're talking about smaller corporates, they still think that this is a sell-side code. It's not. It's for everyone participating in the FX market except the retail. So 11 principles on execution. And then come 5 principles on information sharing. And this is where normally in this kind of sessions, and last year when we were here in Colombia in the beginning of November, it was no stranger to that. This is where we have most of the debate. 11 principles on execution, 5 on information sharing. Information sharing. How and what information can you share with your clients? Or what information can you share with your peers? Can you share that information freely? We all know we live on flow. We live on information. We live on knowing what volumes are going through the market. The FX Global Code doesn't say that you cannot share that information, but it offers guidelines on how to share it and who to share it with. It's very, very important, but this is where, in my opinion, just my humble opinion, this is where, and I remember I started as an FX trader, then I moved into structuring, then I moved into sales, and I remember that there are some things that I wanted to say to clients that I know that sometimes they just come up. And reading the code and going through in about 7 years that we've been doing this kind of sessions, I know that some of the things that I used to say to my clients, I cannot say it anymore. I cannot say it anymore. Or I can say it in a different way, but I cannot say them openly as it was before. It was not because we were wrong. We were doing what we used to do, what we always thought that we needed to do. But the problem is that because we did those things, some persons around the world did use that information and penalized us and penalized the market and penalized our institution. So we need to understand on how to share that information according to the guidelines. And this is where the information sharing really helps, and it's really where the session or the part of the code where we get more debate. So I'll be looking forward to see if tomorrow and Sunday will be happening the same. Okay, so risk management and compliance. 18 principles, the largest leading principle. It covers 7 key risk types, as you can see there: credit counterparty, market operation, technology, settlement, compliance, and legal. So make sure I don't forget any of those. 7 key risk types, very, very important, but a very, very dense part. As you can see, we talked about, it's the corporates say that it's a sell-side code. It's not. It's for everyone. Some of within the institutions, they say, particularly persons from middle office and back office, the code is only for the front office. No, it's not. You have 18 principles here that really cover not just front office. And when you go here, you have 12 or 14 principles for confirmation and settlement, talking about the processes that you need to have. Standard settlement instructions, as we mentioned, are here. Third-party payments are here. Novations, amendments of transactions, they are here as well. So the code, as you can see, out of the 55 principles, 32 are not really for front office, even though, of course, within the risk management and compliance, you do have some of the principles there about market risk, which is more front office related, but not only. You need to have a risk management and compliance framework to carry on all the activities, and most important, monitor. And if there is a breach, you need to know how to investigate it. You talk about segregation of duty. So a lot of that doesn't have to do only with front office. But again, proportionality. Key word here, proportionality. And we'll do that. We'll see how you can measure those, at least have an initial guideline of how many principles could apply to your institution. So we're talking about voluntary as a global code, as the nature of the global code as a voluntary principles-based, not rule-based. But we know that, and it's some of the examples have been really well received, that the code really offers guidance. And when there is no applicable law for that particular situation, the code can replace, or not replace the law, but can become law. Some jurisdictions, the code has been used to become law. The guidance is there. It's for every market, every regulator in a country to apply the guidance in the way that you want. But we really need to change that culture. I'll just go prior here and just talk to you a little bit about the voluntary nature again. Right. No replacement, not replace applicable law, doesn't have the intention to supersede those laws and those guidelines from the regulators, and it does not provide a legal defense to a violation of laws and regulations. That is not really true. The code is really just a complement to laws and regulations. But having said that, as I mentioned, if you want to apply that, if any institution wants or if any market wants to apply, you have guidelines there. And there has been some countries which have applied the effects of a code into their local jurisdiction as applicable laws. So truly voluntary nature, as I mentioned. Let me give you one example of where the FX Global Code can help offer guidance. And the example is the market abuse regulation, which is valid in Europe since 2016. The market abuse regulation covers, for the European Union, covers what it's meant as financial instruments. Financial instruments are FX forwards, FX swaps, interest rate swaps, options, doesn't cover spot FX. So this is true for the market abuse regulation. It's also true for another regulation in Europe, the Marketing in Financial Instruments Directive, the MiFID. Spot FX, it's not a financial instrument. It doesn't have a mark-to-market as per the rules of the European Union. So it's not. So, but MAR contains prohibitions of insider dealing, market manipulation. So it is really a market abuse regulation. It identifies quite a lot of situations that market participants should not practice. And covers, as I mentioned to you, covers the financial instruments. And there was an initiative from the European Security and Markets Authority, ESMA, that it's the authority within the European Union that developed MAR and they developed MiFID. There was a a consultation from ESMA on whether spot FX should be included in MAR because of these issues that we see there. They apply for financial instruments, and they wanted to see whether these prohibitions could also include what happens in spot FX. But the problem is that spot FX, in order to be included in MAR, would have to become a financial instrument. But it doesn't have the characteristics of being a financial instrument. As I mentioned to you, it doesn't have mark-to-market as defined by the European Union. So there was a public consultation open for that. And so they've included that, and I'll just put, we responded to that public consultation, and we said that we strongly support the effects of a code, and we believe, because of the nature of spot FX, not just as the most traded instrument in the spot market, but also as an instrument for policy purposes of every central bank, we believe the effects of a code offers enough guidance for that instrument. The FX Global Code also offers guidance for FX forwards, for FX options, for NDFs. But those are financial instruments and spot FX is not. If spot FX was brought into a financial instrument, in our view, it would go against the full nature of the spot FX, as I mentioned to you, the most tradable instrument, and an instrument that it's used by central bank for policy purposes. And when we see later about market participants, a central bank is a market participant, except if they are trading on the FX market for policy purposes. So if we would bring spot FX into MAR, becoming a financial instrument, then what would happen, for instance, when the central bank would trade FX for policy purposes, for spot FX? That would not be included as a market participant. So we would go here into a gray area. And this doesn't happen only in Europe. We believe this is true because we're talking about the FX code, but the consultation came from the European Union. So we went back and we said that the Global FX Committee is fully committed to an adherence of the FX code, and we are fully behind, we fully support them on those projects, and this is why we're trying to help the market as we want. And we believe really that the FX Global Code, 7 years, it's really not yet mature enough, even though there has been some progress over the last few years. But we believe that the FX Global Code needs to mature, and it needs to be implemented in more jurisdictions than it is today. So we just made that feedback to ESMA. Then the ESMA we responded through the working groups in our committees, and we believe that let me just open all of this. So we believe that it would weaken if spot FX goes to MAR. It weakens the purposes and intention of the FX Global Code. It will bring considerable cost to market participants with very little benefit. It will cause fragmentation and impact liquidity. It will bring more challenges to the FX market, and also as well, what I mentioned to you earlier, the definitions and interpretations of MAR are not suitable with this instrument, given that spot FX is a very particular instrument, as we all know. So we made that assessment to ESMA, and a few months later, they came back with the following feedback. So they say that there needs to be coordination between central banks and also the national competent authorities, not only what they say it's the securities authorities in the countries. They say that further analysis is needed for that potential inclusion, and that possible inclusion within MAR will also need to be to impact and adjustments to MiFID. So basically, this has been assessed as not needed for now. And the global market, it's not only us that provided feedback that we think the FX Global Code fully covers spot FX. All the trade institutions and several market participants, the largest in the world, they also offer the same feedback. But this is just one, as I wanted to mention to you, this is just one example where MAR, as a regulation in Europe, doesn't have spot FX. The FX Global Code is not a regulation. Voluntary, principles-based. But it complements. And this is where we offered our our feedback that it was not needed to be forcing the inclusion of spot FX within MAR. If you go a little bit beyond, but of course then I'll ask SLFA to share this presentation with all of you. If you go, and you can see, for instance, some of the articles within the FX Global Code where that applies to spot FX, but not only, to all the other FX derivatives, as we mentioned, but it also covers some of the topics that are in MAR. For instance, if we're talking about insider dealing, that is covered by the FX Global Code. On ethics, 1 to 3. If we're talking about unlawful disclosure of inside information, that is covered by that information sharing 5 principles that we mentioned. So we believe that what MAR requires is for spot FX is already included in the FX Global Code. This is just an example. There are more examples about where the code helps when the law doesn't cover it. I mentioned to you proportionality, very, very important. The statement that I like more from Jacqueline Law from the MIS, I think we talked about this, right? You need to understand exactly going through the code and see what activities that are covered by the 55 principles of the code, what activities are performed by your entity. And from then on, you can make an assessment. Applying 40 principles of the code, 35, 30, 25, 45, 47, doesn't really matter. It's important is that you get the best out of those 55 principles and apply the ones that are applicable for your business. If I think about algorithmic trading, some institutions do not trade yet algorithmic trading. Then if you go into principle 18, you say, okay, principle 18 talks about algorithmic trading and aggregation services. If you don't provide those services, put principle 18 aside. You do not need to comply with it. If in a few months or in a few years, you start to doing those services, start to offer those services, you can apply that principle at that time. And this is the beauty, one of the beauties of the FX Global Code that allows this proportionality to be measured, not only when you are applying the code at the beginning or implementing at the beginning, but also as you go along. Please keep it in mind. And when we go through the proportionality tool over the weekend, is that you will see that you can go through that proportionality tool, and even if you have a principle that doesn't apply, we really advise that you feel something in there. Monitoring. Okay, not applicable for now, May 24. Someone, maybe you or someone else within your institution, in 1 year time, when you start doing that service, will understand that 1 year earlier you didn't apply because you didn't have that practice. So offer some guideline, but don't think only about you at this point in time and your institution about this point in time. It is an evolving work, and this is why we're talking about continuous education. It is important that you measure your activities and the implementation of the guidelines of the FX Global Code in your activities on an ongoing basis. It's very, very important. So we'll, for those of you that will be there tomorrow, we'll cover that tomorrow or maybe on Sunday morning, depending on how fast we go tomorrow, we'll cover that tool. But that proportionality tool also allows, or the proportionality in this case template, also allows you to do that, just to leave a commentary for the future. So on the FX Global Code, as I mentioned to you, the forewords, the annexes, and just the definition of market participant. You'll see here later. I think it's easier to say which entities are not market participants. Let's summarize it on what I mentioned before. Retail market participant, or private banking clients as well. So individuals, let's just say instead of retail, private banking, individuals are not considered market participants. But one curiosity, a money broker service. If you go and you travel abroad and you want to go to a money broker at the airport and change currencies, you as individual, you are not a market participant. But if that money broker that day or the following day or the end of the week goes and trades with a bank, that money broker is a market participant. So you are not as an individual, but that money broker on their interactions with the wholesale FX market, then they are market participants. But all of this is explained in the code, and just summarize it here. So I mentioned the annexes, 3 annexes, illustrative examples, very good guidance as well. And a glossary of terms, also very important, the statement of commitment, which we'll come back in a few minutes. A lot of reports. Let me just go through all the reports. The one I mentioned to you, September 20, operational challenges facing the FX industry during COVID-19 outbreak. I also mentioned the last 2. The code was updated in July 21, but they offered more guidance through reports on pre-hedging and also on last look. So really helps. Really helps. The bulk of the code are the forward, 55 principles, and the 3 annexes. But these reports also help as well understand some of techniques. And there are some opinions in the market that the bulk of the FX global code should stay as it is. Even on these 3-year reviews, should stay as it is. And that official reports should, for standardization purposes, some opinions in the market defend that the 55 principles should always stay at 55, but then you can offer some guidance through those official reports. These are just opinions, but watch that space. Later in the year, we'll know a little bit more. Other resources that are available. The Global FX Committee has done an excellent work since it was launched in 2017 with the code in adding resources, even though we had every 2 years we have different shares. We had shares already from different central banks. Currently, the share is Gerardo from the Central Bank of Mexico, but the Secretariat of the FX Global Code is really helping to promote the adherence. So they have added quite a lot of resources over the last few years. It's not a wasted time. Really, I assure you, go through that website and check the resources that they have provided. It's quite a lot of information there if you are thinking about adhering to the FX Global Code. I'll come back a little bit later to talk about some of the results of the latest survey. Of course, as you can see there, 2021, 22, there were no surveys. I think we all understand why, of course, with the impact of the pandemic as well. But it's also very important as well that to follow some of the results from the 2023 survey that was it was done in September last year, but they were published in January this year. So current status, where we are now. There is a motivation for adherence working group that has been going on we do have some members there in that motivation for adherence, and it's working very well with the market, and not only with the market, as you can see there, they're trying to go and engage with the rating agencies to promote the ESG, also as well with auditors about the particular G, the point of the governance. So all the topics that we have been seeing taking precedence and taking priority over the world in the recent years about how to be sustainable, how to include diversity and inclusion as well. The FX Global Code and the Global FX Committee through this adherence working group is also working on that. And they are also working on promoting education. I can tell you, for instance, that we had, and that was one of the commitments that we did, and I'll talk a little bit about that later. We did a commitment that as soon as the code was released, we had education programs being in training, being in exams for the FX Global Code. But the Global FX Committee also, and very well done, did that effort to promote education through various other channels. For instance, CFA, the CFA program will start to include, I think it's from next year onward, will start to include questions on the FX Global Code, at least on the level 1. It's very important that we broaden the spectrum so that everyone can be inclined to be educated and then promote the good guidelines of the FX Global Code. Also as well, for the review, the market thinks that this should be the areas that could be reviewed later this year. In which format, we do not know. Reviewing the disclosure cover sheets, also mitigating settlement risk. We all know T+1 is later this month, T+1 United States, Mexico, and Canada, but there are other countries in the world, as you know, that already have T+1. In the last meeting of the Global FX Committee in December, India FX Committee made a presentation about their move to T+1, but that's a common topic around the world, and of course the Global FX Committee is worried not just with T+1, as everyone in the market is, but also with settlement risk, which was identified a couple of years ago as increasing substantially for FX transactions. So maybe there will be some more guidance on settlement risk, and also as well the enhancing of data transparency in FX transactions. I add one point there. I know that there has been some discussions, but just my personal opinion. I would add, if I can make it, I would add the points about diversity, equity, and inclusion in there. Not because it's fashionable, no, because it's needed. Because it's really, really needed. And it's needed as not just for financial markets. But picking up of the example of the two codes that actually were drafted from the FX Code, I'm talking about the two codes that I alluded earlier, the Global Precious Metals Code and the UK Money Markets Code. On their latest reviews, the Precious Metals Code in December 22 and the UK Money Markets Code in April 21, which incidentally should be again updated this month, they started to include diversity inclusion in their guidelines. The FX Code, I think it should also have those topics in there. So these are just some of the criteria that the Global FX Committee uses to determine the topics for that review. Of course, the issue being potentially updated needs to reflect a change in market practice. Of course, that practice needs to take place in the global FX market. That practice should be improved through the development and the setting of guidelines specific for that practice. So they really need to understand that that's really true in order to verify if there is a change. And I think that these conditions verify, or these criteria verify, when we're talking about the review that we saw earlier. Also about the clarification of that practice would contribute to a better FX market. And finally as well, that if there is no improvement of the clarification of that practice, maybe some market participants will not be so inclined to go for the code when we're talking, for instance, about the buy side. So these are just the worries, some of the criteria that the Global FX Committee looks to when they look at implementing the potential reviews of the code. So I just want to go here and talk about benefits for adherence. Just our view, understand, implement, and practice the best behaviors of the FX market if you are adhering to the FX Code. Improve the operations of your FX business. Be a responsible market participant at the forefront of the FX market. Demonstrate that your business practices are aligned with the latest standards, and these standards are updated on a regular basis, as you know. Link your market activities with the G factor on ESG. Strengthen the culture of your staff and your organization. Defy the past. Defy the past, defy the practice, complacency. This is what I mentioned. Complacency sometimes can lead us to some activity which might not be as correct as it was in the past. It doesn't mean that we were wrong. It was just a normal practice. But maybe by doing that normal practice, the market was doing that normal practice, maybe that's not really helped the strengthening of the FX market. And this is why we had some events around the world about problems that happen in the market. Enhancing your market profile to clients and stakeholders, protect and reinforce the investor base of your institution, boost your reputation as a market participant in the FX market. This is very, very important. Before I just go, I need about 15, 20 minutes of your time, probably not as much. Just want to talk to you a little bit about a particular case of how to implement the FX Code, and then just focus 5 minutes on how important is education for this implementation of the principles on an ongoing basis. So I just want to mention to you one example of adhering to the FX Code. There are many examples on the Global Effects Committee website that I mentioned to you, not just this roadmap for adherence, but you have there 6 examples, 6 case studies from market participants from their different sectors and for buy side, sell side. You have their experience on how they adhere to the code. Not every model is the same for everyone. And if you need it, every institution will have their own model because you have your own business, you have your own development, you have your own stuff. Not a problem at all. These are just some case studies that can help you with that implementation. So here you have a roadmap to adherence. In the Global FX Committee, you have the 6 case studies of roadmaps to adherence. I want to bring you another one, which is a bank that we know very, very well. So this is a case of a European bank that actually has offices as well in Asia and in South America, and they cover commercial, corporate, and investment banking. Again, just an example to show you how they did the process of adhering. And it's very curious because they actually started the process of adhering even before the FXable code was launched, because they also worked within the global, at that time, the market participants group that led to the creation of the Global FX Committee. So there were drafts shared, and they started to implement the FXable code based on those drafts, and then they just aligned when the code was live in May 17th. So they did these 7 steps. Created a local working group to steer the project, identified the bank's procedure for every principle, did the gap analysis, created or adopted those policies and procedures that needed to comply with the code, trained all FX-related personnel, but of course they had to establish a government structure to follow and make sure that these processes were well followed and controlled. And finally, they decided to sign the statement of commitment to the FXable code. Did they stop there? No. Ongoing monitoring. So they need to ensure long-term commitment. When you go in through the presentation, I'll just scroll it quickly, but just to stop in 1 or 2 points there, you'll see that some more details to it. I'll just go through 1 slide per each of them. Actually, I think the gap analysis actually has a little bit more, but I'll just go through it and I'll just stop in 2 or 3 points there so you can see how important is it. But when you have that presentation, please just go through. And of course, if you have any doubts, I'm there to help you. This is really, really important. But again, this is just an example. There are much more examples on the Global FX Committee website. So they involved these areas. They held 16 meetings. And as you can see, they started in January 17, but the code was only published in May 17. But then they adapted. The final draft was really, really just a minor adjustment. And they continued until they finalized the product in September 17. 17 areas, a lot of these areas involved, 13 areas involved. But again, this is just their example. Then what they did, they identified the procedures that addressed each principle. They actually were in a very good state because they had 33 procedures reviewed and only 5 had to be drafted new from scratch, and 2 had to be modified. So all in all, they had to work in 7 of the procedures, 7 of the 33. So they were actually in a very good position, I must say. Then they did the gap analysis. Basically, where are we? Where do we want to do? Where we want to be after implementation of the code? What do we need to do in the between? So that's what they did. And in order to do that gap analysis, again, I'll come to the same point, proportionality. Very, very important. Very, very important. And in order to do that, you have the FXable code proportionality self-assessment tool that is on the Global FX Committee website. So you can have an initial analysis of what principles should apply to your institution. We recently made, about 2 weeks ago, this analysis for a European bank, because they wanted to go and add some users on our e-learning tool for the back office. And we actually came to that conclusion, that out of the 59 parts, so I'm including here the 55 principles, 3 annexes, and forward, We think that they are advised to comply with 6. They are required 37, and about 16 are not required. Again, this is just our assessment. You can make your own assessment on that tool, on that proportionality self-assessment tool. So point 6, created and adapted policies and procedures for compliance. Picking up the existing procedure, adapting it, releasing a new one. This is just one example. Then they went into the training. They considered external and internal alternatives. And they actually required an exam as well, with a minimum 70% grade. I'm sorry, but our exam requires 75. We really need everyone to be fully grasped of the effects of a code. But this is just one example. Then, of course, they established the governance procedures so that everyone could carry on and follow and understand exactly how the code would be implemented, and, of course, offer guidelines on if there was some particular delays, some particular deviations from what was understood at the beginning. But this carries on. And then they decided to sign the statement of commitment. I just want to spend about 1 minute here. Signing the statement of commitment. And we had situations in which we talked to some market participants in which they said, oh, what am I committing to? Name of institution has reviewed the content of the effects of a code and acknowledges that the code represents a set of principles generally recognized as good practice in the wholesale foreign exchange market. Not committing anything yet. You are just acknowledging, you review the effects of a code, and you are acknowledging. How do you acknowledge that this really represents a set of principles generally recognized as good practice in the wholesale FX market? Well, I'll give you these statistics. These are the jurisdictions that are on the Global FX Committee. They represent 98% of the volume of the FX market. But the FX Global Code is not covered only by these jurisdictions. At this moment in time, we're talking about here 20, and even though you are including Europe, which, as you know, you have more jurisdictions there, in total, there are 54 jurisdictions, so more than 98%. So everyone would like to have the 100%, of course, yes, but we are going that way. But this is not a marathon, this is an ultra-marathon, okay? So I think you can recognize that if 98% of the volume of the FX market follows these guidelines, they should be really good guidelines for the FX market. Second part of the statement of commitment. The institution confirms that it acts as a market participant. Very simple. If you're not a retail market participant, most likely you are. And is committing to conducting its FX market activities in a manner consistent with the principle of the code. This is where the committing part is. You are committing to conducting its FX market activities in a manner consistent with the principles of the code. The code does offer those guidelines for you to follow. The code also says that in some situations you can have personal judgment as well for what you consider are good market practice. So the commitment that you're doing here is that you are conducting your activities according to the guidelines of the FX code. But you should do that if you want to adhere to the code according to the size and complexity of your activities and the nature of your engagement. Again, if you are a corporate, you have a different engagement in the market than if you are a bank or a hedge fund or a broker or a central bank. You do not need to sign the statement of commitment. Statement of commitment is signed if you want. Some institutions sign it. Some institutions declare it to the market. As you can see, for instance, there's currently about 311 statement of commitment published in the public register of the Global FX Committee, but no institution is obliged to publish it there, not even to publish in its website. Some institutions might want to exchange it bilaterally with clients, or under request, or don't even sign it. The important thing is, the statement of commitment is important, the public register is important to show the global adherence, but the global adherence goes far beyond what is in there. It's important that every market participant follows that. It's more important that if they follow than just sign the statement of commitment. It's important is that they follow the guidelines of the FX code. Publishing the statement of commitment is important, but it also for reputational, for marketing purposes. But the very, very important thing is applying the principles of the FX code. But this way, it's the only way we're going to improve the integrity of the FX market. And finally, I just want to ask 5 minutes of your time just to go through a little bit on why we believe education is key for adherence. And I want to show you not what we say. It's easy for me to be here as head of education for ACI, and with the core values that I showed earlier, it's easy to go and sell my product now. It's not. I'm not here to sell my product. We're here amongst members. SLFA is an affiliate member of ACI for a long time. We're here to show that we dedicate ourselves and we promote the efforts of our 3 core values. But instead of me trying to convince you that education is important, let me show you the results of the survey of the Global FX Committee. So they have made, as we saw before, 4 surveys, 17, 18, 19, and 23. And there were some questions in there put to market participants. And market participants are the largest in terms of volume in the world. Roughly 250, 300 normally respond. And I want to show you the results in 5 of the questions. The first one, steps taken or planned to take by an institution to embed and monitor the effects of a code in their practices. What steps do you need to take? As you can see there, 84% consider that staff training and education program about the global code is an important step, or it's actually the most important. It was always the most important, except in 2019. And in 2019, 83% said incorporate the global code into internal policies, procedures, and codes. It's not important if it's the first or the second. The importance is that it is really, really relevant that you have staff training education about the code. And this is not us answering. This is the market answering. Market players such as yourselves. 84% consider the staff training education program about the effects of code is important as a step to embed the code. Second one, areas of a firm involved in implementation of the effects of a code. And if we compare it to the one I just mentioned, is that if you're talking about training and education, normally human resources will be involved. But the involvement from human resources is still very low. We're talking about 1 institution out of 4 involves human resources. So when I show you the next one, you probably understand why. Biggest challenges to ongoing adherence of the code. Normally, these are the last 3, or the first 3 in the last 3 surveys. Setting an appropriate level of global code trading within my firm is still a challenge. It's one of the top 3 challenges. It has been over the last 3 surveys. So we're saying that the first one, very important step, about 80% consider that it's an important step, but then the involvement of human resources is very low. Am I the only one thinking that this is probably one of the reasons why there is still a challenge? Forms of global training adopted. No wonder. With the pandemic, more e-learning than physical sessions, of course. But quite a lot of diversity there in the training. And the last one about training. How often does your firm provide training related to the global code? Most of the respondents within 6 to 12 months. How often? Continuous education, because the code might change every 3 years, but the market is changing, and your activities might be changing. What you did 6 months ago might be different, not totally different, but you might have also the services that you are offering now. So you need really to do at least 1 year. Each year you need to do a revolving of the training. And this is what market participants consider, about 44%, about 6 to 12 months. Now, I put this here, not so much about education, I'll come back to education, but because we're talking about the survey, I think it's very, very important statistics. What has been the effect of the effects of a code on overall market functioning? They only put that in the last 2 surveys. 69% considered very positive or positive in 2019. Substantial rise to 83% in the latest surveys. they must be doing something good. I think they're doing something very, very good. It's down to us then to implement what the market is doing as a very good tool for improving the FX market. So just coming back a little bit to education, what we have done. So again, as we mentioned with the code, we have developed quite a lot of tools, not just in training, such as situations like this, but we also have an e-learning tool, and we also have exams as well. The whole idea here is that we help the industry and the market participants to promote ongoing implementation of the FX code by each and every one of us. Again, your CEO, your CFO can sign the statement of commitment, they can even publish, but then it's down to each and every one of us to ensure that those guidelines are being applied in practice. Regardless if we are in front office, if we are on management, if we are on risk, if we are in compliance, if we are on middle office or back office. If we are involved in the FX market, then the code will apply to us. So we've developed the ACI online FX global code exam, which we have already talked to SLFA to be available to you at a discounted price should you wish to take that. So this is something that we're just trying to promote, that you can have that continuous education in this exam. I have some slides here where you can see, I'll just go through about the examination procedure, but this is just something that if you want to have some guidelines on going through this, and I'll just leave you with the final point I wanted to mention is to talk a little bit, just 2 minutes, about our e-learning tool. So the training is important through these techniques as well, but also as well, it's important that some market participants, if they want, they have that on a web-based format. So we developed this e-learning attestation and certification portal, which actually includes the FX code, but also includes other codes as well, the ones I mentioned and others, in order to help market participants if they want to have a web-based tool to promote the code with ongoing creation of questions and scenarios so that you can keep up with the development of the market. And I'll leave that to you, that you can carry through, but the whole idea here is that on ELAC, as we call the tool, you have a training part where you can read the codes, but you also can practice questions more on the theory side, what's a market participant, who should be an agent or a principal, but you also have scenarios that really try to reflect situations that happen in our daily lives. We have fictional entities, we have characters, so to replicate the scenarios, you can say that Rui has done a transaction with Shanaka. Shanaka works for a bank, Rui works for a corporate, but his colleague Tivanka has heard the conversation that probably they shouldn't have. How would the FX code behave like that? So you get very, very individually based, you get names, you get fictional entities in order to try to replicate a situation that could have occurred in the market. But of course, and that covers everyone as a market participant, the individual, but also every entity as well. So it covers banks, central banks, investment banks, brokers, voice brokers, electronic hedge funds, corporate. So it covers the whole spectrum of the market. And this is the way that ELAC really helps to promote the adherence, the implementation of the tool. Then also ELAC has, this is the training part, but also has a certification part, ongoing certification. And then the entity can select the frequency of that certification for their staff members. So again, just what we're trying to do here in terms of delivering a training session and then having your, with the exams, you have in ELAC in a much better way because you have possibility to do that on an ongoing basis rather than listening to me for an hour and nearly a half. So just to give you a little bit more detail on that. And as I mentioned to you, this is the content of ELAC now, not just the FX code, but all the other codes we cover. Just to give you a final brief on what the usage of tools for the FX code or for the industry codes, including the FX code. For instance, so far we have delivered those tools, be exams, be in training sessions, be ELAC in 78 countries, and we're trying to increase that number in terms of jurisdictions, of course. And the last point I wanted to I'm going to leave it with you, I'm conscious of time. I'll leave you with the handbook that ACI FMA, I mentioned to you earlier about the model codes. We didn't stop with the model code because we promoted and we support the FX global code. But in conversations with the various stakeholders, there was a need for further guidance. So we created the ACI FMA handbook, which you can consider an evolution of the model code, but the model code existed when we didn't have a flexible code, global precious metals code, or UK money markets code. So maybe we shouldn't consider an evolution because the whole purpose of the effects of the handbook is really to support the three codes that I mentioned to you. And this is why when you go into the handbook, and I'll give you some examples, I'll go there just to mention a little bit. For instance, in every part of the handbook, and this has been provided by ACI FMA, you have a reference to the particular principle that applies to that content on the FX of a code, on the precious metals, global precious metals code, and UK money markets code. Because the purpose of the handbook, as you can see the name there, is really to support and reinforce those industry codes. But the need was there to develop something else. I will not say evolution of the model code, because the FX of a code, as I mentioned in the beginning, is very general. And it can be applied in all markets, in all jurisdictions. But if you need more detail, then you have, if you want, in the handbook. And in the last few pages, you have here, for instance, the FX of a code mentions the importance of KYC checks on principle 37 and the risk that comes from direct payments. All of these related to money laundering and terrorist financing. And that is very good enough, and it's enough for a global application. If you wish to go down in more detail and see how the codes will behave with more details, then you can go to Article 74 of the FCI-FMA handbook, because you have there more details on how to apply those guidelines. Another one, for instance, is the benchmarking fixing rates, Principle 10 on the FX of a code. If you go to Article 74 of the handbook, you have more guidance. So if you want to have the handbook, it really helps as well with the application of the guidelines of the FX of a code, if you want. But the FX of a code offers the best guidelines for the market on a general nature. If you want to go down in more detail, the handbook will help you with that. And the handbook is available for, so far, currently only for members of ACI and members, of course, of the affiliated national associations like SLFA. And I'll leave you to it. So thank you very much for your time, but of course I'm available for any questions, the ones I can answer and the ones I might not be able to answer. But I'm available. Thank you very much. I think there was a microphone if anyone wants to. Any doubts, comments, interrogations, preoccupations? It's Friday evening. Well, if there are no further questions, then again, thank you very much to SLFA, to everyone to being here. Thank you again. Thank you.
Well, thank you, Rui, for that bird's eye view, I would say, because that he really did not get into the nitty-gritties of what the FX Global Code was, and I think he left the best for the weekend, where he will get into brass tacks, I'm sure, and you will have more questions than answers, so I guess that's the time that you should raise them, and maybe not today, not this evening. So I wish to thank Rui once again. And also, I wish to thank the CEOs who are still present with us, and to the ones that who I think had to leave in the interest of time. because they have busy schedules. So thank you very much for being here, to them as well. And also to the non-practitioners who are with us. Maybe some of this may have gone above our shoulders, but I'm sure that you will get pretty up to speed during the course that is prepared for the weekend. And to them as well, if you are not with us tomorrow, maybe this may have piqued your interest, and you will definitely come for more, and you will have more questions as you go along, and maybe somewhere down the line we may have another program for you, fingers crossed. So thank you to you all as well, and also to our extended family of the Sri Lanka Forex Association, as you support us each and every day for any education or non-education related events. Thank you to all of you as well. And last but not least, we thank the management of Bank of Ceylon, who has always been with us whenever their support was needed for any Forex SLFA related events. So thank you all once again, and have a great evening ahead.